Or maybe a time when you need to submit a paper income-driven application to apply for an income-driven plan. Maybe the online application is not working, whatever the reason. There is a paper application you can complete physically, and I'm going to walk you through a tutorial on how to do that. I'm Megan, Senior Student Loan Consultant with Student Loan Planner. Let's dive in. This is the most recent income-driven repayment plan request. Expiration date is 2027, so this should hold us over for a while. We have first section being borrower information. So just put your information here. Email, I do recommend putting your email address because that's the fastest way you get information about the progress of your application. Section 2 is going to help figure out what are we doing here, right? So we want to either enter an income-driven plan, or maybe we're submitting an application to recertify our income or recalculate our payment early. Or we're switching to a different plan. So just check the box that's relevant to you here on why we're submitting this application. Choose a plan. I strongly encourage folks to specifically choose a plan that they're applying for. I don't generally like this. I want, the income-driven plan with the lowest payment. I want you to choose the plan that's the best for you, which could be the, same thing, the lowest payment, but I don't want to leave it up to the servicer for them to do. So save plan, we're thinking that this is going to be repealed if it's not already by the time you watch this video. So we've got income-based repayment, which this encompasses both new and old IBR. New IBR is a calculation of 10% of discretionary income if we did not have loans prior to July 2014. If we did have loans before July 2014, then we would be on the old IBR calculation, which is 15% of your discretionary income. Pay as you earn is an option, which if we did not have loans before October 2007, we could be eligible for pay. If we did have loans older than October 2007, then we are not going to be eligible for this plan. And then ICR, income contingent repayment. This plan is based on 20% of discretionary income. It is the most expensive income-driven plan. This would be limited to folks who had consolidated Parent Plus loans that did not do the double consolidation. So IBR is probably going to be one of the cheapest options, if not pay. And one of those two will probably be what you're choosing on this application. Number 3, do you have multiple loan servicers? That's just a factual question. Do you have multiple companies that your loans are at right now? Yes or no? Are you currently in deferment or forbearance? You could say no. If you're in repayment, we're just switching repayment plans. Or if you are in deferment or forbearance, you would say yes and just explain if you want your payments to start immediately or if you want to wait until your natural deferment or forbearance ends. Section 3 will be about your family information, family size information. Make sure you're putting your name and your social at the top of each page of this application as well. Number 5, how many kids do you have, including unborn children? And how many receive more than half of their support from you? Number 6, how many other people, excluding your spouse and children, live with you? So this could be like your aunt living with you or your parents, somebody else in the household that you're supporting them more than half of their financial needs. Section 4A will ask more about marital status information. Are you married or are you single? Go ahead and check accordingly. And make sure to read the instructions too. So if we're selecting single, we can skip to 11. If we're selecting married, we just have to skip to question 8. So 8 would be, does your spouse have federal student loans? Yes or no? Follow the prompt on what number to go to next. So if they do, we'd have to include our spouse information here. If they do not, we'd skip to item 10, where we would be asked if we filed jointly with our spouse for our last tax return, yes or no. And then that tells us to either go to item 13 or 11. So make sure we're following the flow of this application. Why do they ask for your spouse's information if they have student loans too? Well, if you're on an income-driven plan, generally they'll take into account how much debt that your spouse has as well. And that could be a good thing because that means both of you won't have 2 income-driven payments based on the whole household income. That would kind of double up on your payments, which wouldn't be fair. So they take that into account when they include your spouse's information in this application. If we have to go to section 4B, it's going to ask, has your income significantly decreased or has your marital status changed since you last filed your tax return? So if yes, you continue to 12. If no, they simply just want you to provide your most recent federal tax return. The best page on the tax return to provide is the 1040 page from your federal return, from the most recent return on file, because it shows on line 11 the adjusted gross income. That's the number that they pull when they calculate your income-driven payment. Number 12, do we currently have taxable income? We would say yes or no here, and then go to the next section that it's telling us to go to. Now, if we're filing jointly with our spouse, we would have to answer 4C, this section. So it's going to go through and just ask more information. Did your income decrease since that last tax return? What they're looking for is your income lower now than what your tax return reflects? Because if it is lower now, they can ask for alternative documentation to keep the payment truly off of what your income is now, like a pay stub, for example. Has your spouse's income decreased since the last tax return? Yes or no? Do you have taxable income at all? Yes or no? And then continue to follow to where it's telling you to go. Does your spouse have taxable income? Yes or no? And then again, just follow to where it's telling you to go in the application. Section 5 will give them authorization to retrieve federal tax information from the IRS. This is somewhat of a convenience where every year when you're updating your income, this gives them permission to look back at that last tax return so you don't have to submit information like normally you would. So that could be something that you consent to. There's more information on that. You could also decline consent to that, and then you would manually recertify your income every year. Make sure you're putting your name and your social at the top of each page. Section 5B will outline the different types of income documentation you could submit. The tax return is oftentimes the best because it shows all sources of income, does not include anything that was pre-tax, right? So if we contributed to 401k or IRAs that reduced our adjusted gross income, that's going to reflect on that tax return. But other documentation you could submit would be a pay stub within the past 90 days. It could be a bank statement, a letter kind of explaining the frequency of your income, the amount of income that you have. So there's a couple different ways that you could provide income documentation. Section 6 will just have the borrower requests, understandings, authorization, and certification. We do not need to request a 1-month forbearance. This probably is going to be left blank. This only is applicable if we are switching from the IBR plan to a different plan. So if you're currently on income-based repayment and we're switching to like pay, for example, that would be a time where we're selecting this box. But if we're on the save plan or we're on the pay plan and we're switching to IBR, we do not need to select this box. This is a weird rule where basically they're just saying if you're on IBR and you have to make a switch to a different plan, we have to either pay the standard repayment plan payment, which is really high usually, or at least $5. And that's kind of an annoying little thing that still exists within the rules of moving between plans with IBR, but most folks probably won't have to select this. Continue on to where you sign and date. And that's it. The rest of this page, these pages, we do not need to submit. We really just have to submit 1 through 6 when we're completing the paper application. Those are the pages that have the information that they need to start processing your application. I hope this was helpful. Let us know if you need help. Student Loan Planner, we're here for one-on-one consultations, or check out our website or other videos for information on how to manage your student loan plan. I'll catch you on the next one.